We have the best of both worlds today. Best of the technical side, best from the fundamental side, but both sides are failing us right now. Joining me today are Jim and Peter. So what are we seeing on the technical side, Jim?
We have seen serious near-term and longer-term chart damage. As you know, I've been talking for quite some time that the line in the sand was $1,500 in gold, and we blew past that level on the downside today. So we are in a bear market. About the only thing that the bulls can look at right now is that on a near-term basis, the gold and silver markets are oversold on a short-term technical basis and due for a short-term technical bounce. But make no mistake, the bears are in full near-term and longer-term technical command of both gold and silver markets.
So then, Peter, do you agree with Jim that this is definitely a bear market?
Well, certainly from a technical perspective, from the charts, it's the retracement from the highs of 2011 are much greater than 20%, and yes, from a definition perspective, that would be defined as a bear market.
Jim, you've been at this a long time. Is this the first time you see something like this in your trading career?
2001, the terrorist attacks on the U.S. created high uncertainty and anxiety in the marketplace. But in the gold and silver markets, I think you have to go back to 1980 to see that kind of price action that we've seen the past 2 days, and that dates me a little bit. I wasn't quite old enough to be in the marketplace at that point, but it is certainly unprecedented for the vast majority of market participants, and this will pass. And like I said, the astute investors like Warren Buffett, he likes to buy when people are fearful and be fearful when people are greedy. So, the marketplace is fearful right now, especially gold and silver. It's spilled over into other markets, and we'll just have to take it day by day.
Now, Peter, you've also been doing this for quite a bit. Have you seen something like this in your trading career?
Yeah, unfortunately, I turned 61 yesterday, and in 1980, I experienced, the bull market in gold and silver, where gold traded up into the 800s and silver was in the $50 range. And then the subsequent drop that occurred over the next year. I did not like the price action at the 1680 level back in November, and suggested that the market was heavy and that it would come down. And what happened on Friday, I actually took the time and wrote a small blog on Sunday. What happened on Friday was people that just uncomfortable holding the long position, with Cyprus being the excuse. And 10 metric tons of gold from Cyprus is nothing. It's not the fact that Cyprus may sell 10 metric tons of gold. It's the concept behind it. If the EU, although they don't have a legal mandate to force Cyprus to sell its gold, were to encourage Cyprus to sell its gold, which I certainly believe Draghi did last week, what happens, come summer if the situations in Portugal, Greece, Spain, Italy start to deteriorate? These countries have considerably greater gold reserves than Cyprus. So the perception was, it is possible that these players may be forced to sell their gold. This came into a market that already had thin demand, and it just wiped through the technical support levels.
Okay, Jim, what are you seeing in the charts? It's the big question, but can you see this going any lower?
Yeah, we could go lower, but the thing is, right now, you can look at the chart, but it's more importantly a money game. When your trading account goes into the red, you have to liquidate, and you don't look at the charts, you don't look at the fundamentals, you just look at that account and say, I got to get out. You're getting a margin call from your broker, or you suffered so much pain that you have to just liquidate that losing position. So that's what we're seeing right now is panic selling. And like I said in my Kitco morning and afternoon reports, you are seeing blood in the street. And when you see blood in the street, that's when you see value buying opportunities that don't present themselves very often. They do occur. And at some point, you're going to see value buyers step in, and that they're going to look back on those value buying opportunities in future months and years and say, wow, I really got a good price there. History shows that.
Peter, when we have these sell-offs, how long does it or can it take for the market to recover?
How long does it take for the market to recover? It's I think the selling is over, because I still think See, the issue I'm running into today, which bothers me more than Friday, was Friday. I sensed that prior to the European close, there might be some more liquidation if 1527 didn't hold, which it didn't. And then the New York traders came in and hammered the market around 3 o'clock after they figured out their margin calls. What bothers me today, as opposed to Friday, is there's no place to hide, because on Friday, at least the stock market more or less held its own. Today we have triple-digit losses in the Dow as we speak. The Dow's down 213 points. You look at any place to have your money right now, and if you look through the commodity index, doesn't matter which commodity you look at, they're all down significantly, at least 3%. You have the Dow down 200, the NASDAQ down, and the S&P down. So where are you hiding? You're hiding in 10-year Treasury bonds yielding 1.7%. This feels like 2008, but there's no news headlines to substantiate a 2008 event. So I think the capitulation in metals may continue, but in the 1320 range on gold, again, I hate trying to catch a dropping knife. I'd probably step in.
So you're not a buyer now?
I'm a trader. At these levels, again, you don't catch a falling knife as a trader. If you're going to trade this market, you have to do it via options. But I don't think any of the fundamental things that caused the market to rally from 2008 to where it is now have changed. So if you're a long-term investor, these are going to be opportunities where I think you will make a gain down the road. Could gold go to 1,200 first? Yeah, possibly, sure. But I still believe gold at these levels over the longer term is going to be a smart place to be relative to your portfolio.
All right, Jim, as you said, we're definitely in a bear market. Is this one of those things where you can spin it in a positive way?
Markets go up and markets go down, no matter what market it is. Markets have extreme bear markets and extreme bull markets. We are right now in an extreme, at least near-term bear market in the gold market. And if history is correct, the market's going to find some value buying interest at some point, and the market's going to start to trend sideways and then sideways to higher. So if you look at history and the history of markets, this is, we've seen high volatility, but it's something that occurs in nearly every market over a period of time.
All right, gentlemen, thank you very much for joining me today. And thank you for joining me as well for this special edition with our two juggernauts on these big moves in the markets. If you have any questions or comments, do not hesitate to send them to newsfeedback@kitco.com. Thanks for watching.